Hey traders, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, March 20, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Well, first off, today was the spring equinox. So we shifted into another energy source, if you will, kind of from one side to the other. We'll take it at face value. A lot of times market trades up or down into these events. Right now, what we have is a market trading sideways. We had a bottom last week. We talked about it last night. We talked about it before the bottom got there. We don't need to belabor the point. But right now, what we have is a market that's essentially going sideways, eating time off the clock. And if you draw a parallel channel, if you will, you'll see that the market made a thrust up from the low. She's been eating time off the clock for about 4+ days. So she's building energy for another push higher under normal garden variety market conditions. Has anything materially changed from yesterday? And the answer is no. It's another day where the market basically tested yesterday's high, give or take a few pennies. She pulled back, but nevertheless, she's still eating time off the clock in the same range. Let's not forget, the major job of Mrs. Market is to trick, trap, fool investors of all kinds from all around the parlets. She likes to shake them out. She likes to fake them out. And just when everybody's out of the way, the market makes a big move in one way or the other. She doesn't want you on the train. One thing I thought was interesting today was just like a couple of days ago, the market had an opportunity here on the 18th to go down, chose to stay where she is. It was a pullback day, nothing wrong with that. Today, when you woke up this morning, for example, the futures were down pretty heavy, not heavy, but they were down with an opportunity to go down further as much as she wanted. However, the choice was, and we'll get to this when we get to inside the numbers in a moment, the choice was to not only rise, but jam the market up and leave the downside, as we say in the trading parlance, on the table. Yeah, the market finished down a little bit on the day, but she could have been down a lot today. The choice was hers. The choice was not to do it and just eat time off the clock. I find that interesting. I take that stuff at face value. The market had an opportunity to go down. Overnight was down. We woke up this morning, it was down. They were talking about interest rates. They were talking about the ECB lowering interest rates, what the Fed did or didn't do. The market was down. All of a sudden, the market opens, and guess what? There she goes. She started rising up like a hot air balloon. We'll get to that in a few moments. Here's the weekly chart. One more look at it. Remember this trend line coming all the way from 2007. She spiked it last week, ricocheted off of it. And right now, she's making a decision. It's a decision point from a weekly perspective. It'll be interesting to see where we close the week. Is she going to close the week down closer to the line, below the line? Is she going to finish the week well above the line? Is she going to close the gap up here that resides around 575.92, I believe? We'll see what happens by tomorrow's close. A lot depends on how she treats that 50-week moving average. Why is that? Because I know for a fact from experience around the Wall Street parlance that a lot of money managers use the 50-week moving average, not only in the S&P, but across the board in a lot of stocks that they may buy for portfolios. They use the 50-week moving average as a good benchmark. Below the 50-week moving average, they're uncomfortable being in a long position. Above the 50-week moving average, they're fine with it. Riding the 50-week moving average, they're watching. They're watching very closely. They're making a decision based on the 50-week moving average. You can take that one to the bank. Let's see what the numbers say. Let's see what happened inside the numbers today. What important numbers did we have? As you could see, it was a happy Thursday and welcome to the spring equinox. It's a shift. We've gone into the spring season. First, Mrs. Market tried to pop them in the overnight session, but sold them off in the wee hours of the morning. So let's start with today's pivot coming in at 564.60. Let's see how Mrs. Market treated the pivot. It's very important to be able to identify the pivot every day. Why is that? Because above the pivot, she's bullish. Below the pivot, she's not. She's bearish. So you want to know what your Mendoza line or water line is each and every day. Our pivot is 564.60, depicted by this green line. You could see the gap down this morning. And what happened is, as soon as she gapped down, as soon as she opened the tape, she rallied right back to the pivot and was relentless on the way back up. And the question is, were we participants from the live room and inside the numbers perspective in that ramp early this morning? And the answer is, we had many, many traders in the live room make thousands and thousands of dollars. It was just a little tiny bonanza, not so tiny, but it was somewhat of a bonanza. What I was telling traders as they open the tape is somewhere around 562.15, give or take. That's where I would be a buyer, down for about $1, if you will. And traders started buying it up at the open, and they started riding the tape back up, took some profit at our base hit with potential, and then the potential holding trailers gave us what we call Whoppers and Whopper Juniors. She filled the gap. She kept going. Remember, pause the video, read the notes, go back to the chart to double check the work. And here you can see at 9:37 above the pivot, 564.60. On candle closes, opens the door for a run upward toward the gap left open last night around 567. And then the next number up in the sequence, 568.25. That becomes a target, 9:37 a.m. The target is identified. That was a good target for traders looking for an exit on the long. They obviously went higher. Remember, pause the video, read the notes, do the thing. What I want you to do is go back to the charts to double check the work. Real quick, 568.25 was short-term overhead resistance. We had some traders exit. We had some traders take a short scalp there. It's hard to see on this right here, but you could see there was a short scalp there. Our scalps are 5 to 7 S&P handles, 50 to 70 SPY cents, and if you count them up, they gave you the trade. Remember, pause them, read them, go back to the chart to double check the work. Now, they never did get to yesterday's high. They came close, but at this point, what these are called is risk-free, emotionless trades. Once we're in a trade and we have profit in our pocket, we take profit along the way. We have trailers. If you have 4 contracts or 5 contracts, whether they're options or ES futures, it doesn't matter. You take them off along the way and you're holding trailers. These are risk-free, emotionless trades. These are the ones we want. These are the ones we love. We had 3 stocks on the move today. We have a table of numbers here that cover a dozen markets. Might want to take a gander, write some of these numbers down, and find out how the market reacted when they got to these numbers in a variety of markets. The market is not going to hit each and every one of these numbers in all 12 markets every day. But when they do, it's interesting to see the reaction, what happens when they hit these numbers. It shows you that these numbers are absolutely, without a shadow of a doubt, bona fide. What's going on over in Camp IWM? Any material change in IWM, the small cap space? No, they basically almost touched the 20-period moving average today, pulled back. They're doing the same thing as the spiders. No material change, no reason to harp on the IWM. It's all the same market. If the market's going to go, it's going to go. You're not going to have the small caps going one way and the S&P and the Dow and the NASDAQ going a different way. They're all going to go together, whether it's up or down. It's all the same tape, essentially. Same deal with the DJT or the transportation average. The folks down at the transportation department finished in the red today. Basically, everything finished in the red today. But you'll see they're basically just going sideways, eating time off the clock, building energy for another push higher. Doesn't guarantee another push higher, but what they're doing is building energy in preparation for that push higher. First, they would like to shake everybody off the tape. They want everybody off the train before the train leaves the station. That's just the way the market works. Same thing with the Qs, down a touch today, tried to rally, pulled back, everything did the same thing. Again, eating time off the clock. Chart looks very similar to the spiders, very similar to the transports, very similar to the IWM. Again, hence all the same market. No need to belabor the point. If they're going to go, they're all going together. Just a gander at the 50-week moving average, you can see how they're struggling. So it'll be interesting to see where they close the week. Tomorrow, Friday's close, at 4 o'clock. Are they going to stay below or pop back above the 50-week moving average? The 50-week moving average is, write this down, uber important. Put it on a sticky note. Uber important. How about the XLF bucking the trend today into the convergence once again of the 50 and 20 period moving average? Pardon me, 100 period moving average and 20 period moving average up a touch today. Again, if there's nothing wrong with the financials, it's unlikely there's anything wrong with the underlying structure of the tape. It will be interesting. This is the weekly chart to see where they close the week relative to the 20-week moving average in the XLF. That's something to keep an eye on for Friday's close. SMH down 36 cents today. We're not going to make a federal case out of that. They're just trying to work through over time. Time is more important than price. They're trying to work through the 20 period moving average. If they can get above, there's another leg higher. Just like all the other markets, eating time off the clock like this, building energy for the next push higher. Doesn't guarantee the next push higher, but what they are doing, ing in italics at present, is building energy for the next push higher. Hey, if I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, my strategic forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.